this channel is to educate new investor who does not have understanding of capital market or financial planning. So stock market is very lucrative field. For some, it's fast way to earn money. Offers for some invest money for long term and get better returns as compared to normal or traditional investment options. However, before starting to invest into a financial market, one should understand the basic of financial market, how financial market works, their concepts, and different types of financial avenues to invest. So financial market and capital market is the same. So you might see that I am using this concept interchangeably. So it's the same. Or you can say that financial market, capital market, or stock market is the same. So this series of videos will take you from a basic level of financial market to advanced level of financial market. So let's start with the basics of capital market and investments in capital market. Part one, the concept. What is a financial education and its importance? So financial education is the skill required to earn money and in equal measure in the spending it wisely. Though it's a skill to how you can manage your money. So financial education provides you a basic life skills to build a secure, sustainable financial future. Proper financial planning or financial knowledge can improve your ability to save for your long-term goals and prevent you and your family from financial emergencies. So next concept is saving. So what is saving? Saving is nothing but money put aside from income to future commitment instead of spending them immediately. It is generally associated with a bank account or cash. So your cash account balance would be your saving. Reason being that you get small rate of interest and has high liquidity anytime you can withdraw your money from your bank account. As opposed to saving, there is a concept called investments. So investment is nothing but it's a kind of saving too, but it's a process of investing money for short-term, mid-term, long-term goals with the expectation of some benefit or future in future benefit or profit in future or high returns compared to bank saving. So top investment options. One is health or medical policy. So you would ask why a medical policy is one of the saving. I would suggest yes, medical policy is always your first and foremost saving. It should be your first and foremost saving. Reason being that you are while taking the medical policy, you are investing into your health or future medical bills. You know that nowadays medical expenses rising high. So to mitigate those expenses, one should have a medical policy, and it will cover your future expenses. So medical policy is first and foremost investment option. Second is bank fixed deposit. Bank fixed deposit is traditional investment where you invest or you secure your money for fixed term and where on which you get fixed rate. Second is mutual fund. It's one of the capital market avenue. One who does not have a knowledge of capital market, they can invest to mutual fund. However, it's again linked to the market. So if you don't choose right mutual fund, you might lose your money. National pension scheme is one of the saving scheme where you invest for your future retirement. After post-retirement, you start receiving a pension based on your corpus. Public Provident Fund is non-taxable and tax benefited saving under Section 80C. Then bond and government or bond. So bonds are so government and corporate bonds. So It's one of the secure investment avenue where investor can get fixed rate of interest along with during their tenure of bond, and at maturity they get the principal back. Equity and shares, it's a capital market instrument, which is our studies mainly would be focused on equity and shares and the trading. And then last but not least, the avenue of the investment is the coal, land, and real estate. So next concept is budgeting. So budgeting is first step of financial planning to plan, track, and control the inflow and outflow of your income. So why budgeting and what is the benefit of budgeting? Budgeting actually, it puts checks and balances in place in order to prevent overspending at various levels. It takes into account the unexpected need for funds. Then it disciplines you in matter of earning and spending. So when you have proper planning, budgeting is in the part of the first of your financial planning. So budgeting will make you understand of your income and obligations and how you can save your money and where you can save your money. You can plan accordingly according to your budgeting planning. It helps you to maintain same standard of living even after post retirement. If you plan your budget properly, then you save money and it will help you to earn returns during your retirement. So time value of money, next concept which is very crucial. Money has time value as it times passes. So when time passes, the money loses its value. Uh, this means that the value of 2000 rupees note you have today is higher than its value of 5 years after, even if there is no inflation. So let's take an example. If you invest rupees 1 lakh rupees today at 5% per annum, you would receive 1 lakh 5,000 after a year. Thus, 1 lakh rupees is equivalent to rupees 1 lakh 5,000 a year after. Let's understand the types of investment and rules. So there are basically three types of investment: is short-term investment, mid-term investment, and long-term investment. So short-term investment is for 1 to 3 months. Long-term investment, mid-term investment is for 3 months to 1 year, and long-term investment is for more than 1 year. So in short-term investment, you can say that your bank deposit or cash deposit is one of the short-term investment. Mid-term investment is also your bank deposit, and then municipal bonds and less than 1 year money market instruments. Long-term investment is the investment is more than 1 year, so the investment which you do for your future planning. The golden rules of investment or investing. So you need to remember these rules by heart, because if you don't, these don't follow the rules, you would not be wise investor. First is have a strategy. When you want to invest your money, you should have proper strategy where you want to invest, how you want to grow that money. Second, that if you do not understand anything, do not invest. If you do not understand something, do not invest in it. I again repeat that, do not invest in something you do not understand. Example, if you are not aware of capital market or share market, how it works, you should not invest into share market. You should first learn the share market, how share market works, and then start investing in the share market. Second, third and most important rule is do not put all your eggs in one basket. It means that do not invest your all money into one investment. It will it will create a risk and you might lose your all the money. So your investment should be wise, diversify. You should invest into different investment avenue. Next is respect the market. So I've seen that people blame the market when they lose the money. It's not because the market behaves differently. It's because that their investment strategy is very not proper. That's the reason they lose the money. So you should not blame the market. You should blame your strategy. So first learn the market, have a strategy in place, then do not invest all your money in one avenue, and then don't you know don't invest or don't respect the I mean don't disrespect the market. This is the strategy, or this is the rule. These are the rules you should be aware of while investing. Let's move on to the capital market concept. What is a capital market? Capital market is a part of financial system where corporates and government raise the money by issuing shares, bonds, and other long-term investment. So there are two types of market. First is primary market, and second is secondary market. So primary market where IPOs are issued, and secondary market where existing shares are traded. So we'll discuss this concept in detail in consecutive slides. Secondary market has two markets. First is stock market, which is a regularized market, and second is OTC market, which is unregularized market. So capital market. Why capital market? Capital market. There are why one should invest into capital market. First is it has a good returns. Second is long-term investment. Third is regular income. So capital, when you invest in the capital market, you might or you receive regular income. There's a potential that you can earn regular income. There is no lock-in period, so it's highly liquid. And then you can earn dividend from your long-term investment. You also can earn additional bonus shares from your long-term investments. So let's understand the concept of primary market. What is primary market? Primary market is the channel of corporate companies and governments to raise the money for their ventures by issuing shares to the investor. When they issue shares, what does it mean? When they issue shares, means that they offer the ownership to the investor, part ownership to the investor. So shares are nothing but the owner. It represents the ownership in the company. What is the secondary market? Secondary market where existing owner or existing shareholders buy or sell shares among themselves. It's this is it's called also trading, and it's a part of secondary market. So let's understand the insurance market. What is the insurance? Insurance is an arrangement by which a company or a state undertake to provide a guarantee or compensation for specific loss, damage, illness, or health in return for payment of specific premium. So when you buy the insurance, you have to pay the premium. Against that premium, you leverage the sum assured amount. If something happens to you, or something happens to your family, you can claim that amount and you can survive, or you can say example in medical policy or health policy, you make the payment with you payment of premium, and say 10,000 or 15,000. Against that, you get the sum assured of 5 lakhs or say 6 lakhs. So you leverage that amount to potential damage. So types of insurance: first is life insurance, second is general insurance, and third is health and medical insurance. In life insurance, you have different plans like traditional insurance, unit-linked, and term insurance. In general insurance, you have vehicle insurance, property insurance, fire insurance, and medical and health insurance, and individual family floater. That's all for today. Thank you for watching. Do press bell icons for next videos, and do share, like, and comment, and give suggestions how I can improve the quality of video. Thank you, and